Do you ever get baffled and confused and really struggle to figure out which ETF to use to invest into the S&P 500, the top 500 companies within the US? In this video, I'm going to go through very quickly a number of different options that you could go for that are distributing ETFs. What does that mean? It means that it will pay you a small income periodically over the year. This is something that I really struggle with, and I literally just plunked for the first name of an ETF that I came across that seemed to invest into the S&P 500, and that might not have been the best choice. So let's go and have a quick look and see which ones we're actually going to be talking about today. Going to have a look at the Vanguard S&P 500, known by the ticker symbol of VUSA. We'll then have a look at the iShares Core S&P 500, and that is IUSA. Then looking at the SPDR S&P 500, and that is known by SPX5. And then finally we have the HSBC S&P 500 ETF, and that's known by the ticker symbol of HSPX. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. What we're going to do is use the Just ETF Screener website to break this down a little bit more. We'll look at is a couple of key metrics, things that I think are quite important to have a look at when we're actually deciding which investments to stick our hard-earned money into. And what I'll say out front is none of this is financial advice. Past performance doesn't mean that that's what we're going to see in the future. Money that you invest is at risk. I'm going to use these 4 ETFs. They are all distributing ETFs. We'll have a look at fund size. We'll have a look at what the total expense. Something I do like is what dividend yield is. We'll look at what total returns have been like over a few different time periods, 1, 3, and 5 years. And we'll also have a quick look at what the volatility of the different investments are like, and we'll look at that once again over the 1, 3, and 5 year. And if you hang around to the end, I'll show you this all pulled together on a nice spreadsheet that I will link down below that you can get your hands on. As I said, we're going to have a look on Just ETF. So I'll put a link down below to where you can find that, but here you go. Here is the very quick overview of these different ETFs. What I'll do is I'll use VUSA and sort of talk through some of those things and where you can find that information, and then just do a quick run through in a comparison later on in the video. S&P 500, couple of things that you're going to be looking at on this page as we run through, and these are some of the key metrics that I was talking about. What's really useful is go and have a quick look at the description, see what the ETF is actually about. This one is basically an ETF that tracks the S&P 500 index, so the top 500 plus or minus companies within the US by market size. It is full replication. These all distribute, so you will get an amount of money come to you over the year. We're going to have a look at the total expense ratio. This one coming out at 0.07 per annum, and this is the largest market size. You have 32,309 million invested into this fund, which is pretty large and one of the largest that you're going to see. It has 499 holdings. Those numbers will go up and down, and you will see when we look at some of the other ETFs, they will have 503 in their holdings. Chart just gives you a quick idea of what growth has looked like over a number of different time periods. Something that is useful to have a look at is when was the fund actually founded, and this one is back in May 2012. It is quarterly distributing, and what's quite useful to look at is what are the holdings, and this will not come as a surprise to anybody. The main holdings being your Microsofts, Apples, Nvidias, and the top 10 holdings within this ETF make up just over 32% of the fund. Tech is on a rally at the moment, so tech is making up 32+%. You get to see performance over lots of different time frames. You can see it within years. I have used 1, 3, and 5 years to do this comparison in this video. Dividend yield coming in at 1.14%. That just shows you that the dividends get paid quarterly, and they get paid in March, June, September and December. Many of the ETFs will be looking at that kind of frequency, but you'll see one of them is going to be semi-annual. And then another thing that is useful to look at is what is that annualized volatility? How much do you see the price going up and down? You want this at as low a figure as possible, and you will see over the 5 years there's been quite a bit of movement in the price. I'm not going to go through all 4 of the ETFs. What I'm going to do is I'm going to put them up against each other on just ETF by going for compare selection in detail. This setup. I'll give you some of the basic details about the fund, like its ticker and whereabouts it is in its 52-week low to high, and all of them, surprisingly, are sat towards the top end of that. Remember, you want to be having a look to see how old an ETF fund actually is. And this gives you, on the inception date, it will show you who is the oldest. So you have the oldest one being the iShares Core, S&P 500, IUSA, and actually the youngest one is Vanguard. But many people know that name of Vanguard. It is synonymous to ETF investing and falls back to who was the man who brought it up? Jack Bogle, and he invented the low-cost index fund. Another thing that is useful at seeing, we see as they move from the right to the left, you have BUSA being the largest holding in fund size with 32,309 million, right down to the HSBC S&P 500 ETF only being just over 5252 million. Distribution, I did say that these were quarterly and semi-annually, so you have the BUSA, IUSA and the SPX5 coming in as quarterly, but you have the HSBC one comes in semi-annually. So first 3 all do that March, June, September, December payment, and you then have the HSBC doing January and July. So it may be something that you have very lean months within the year where you get dividends paid, and you might want to fill that gap. That might be a reason why you go for the HSBC version of the S&P 500. I think one that quite a lot of people will be interested in is that total expense ratio. You have Spider, or the SPDR, coming in at the lowest at 0.03, and that I think is the lowest total expense ratio I've seen for any ETF that a UK investor can get their hands on. If anybody knows of any that come in lower than that, please do drop a comment down below. I would love to see which one is coming in. So the cost of that one would be £3 for your £10,000 invested into that ETF, which is basically nothing. You aren't going to see that really doing any damage to your returns. And then you've got HSBC being the 0.09 TER, with the other 2 coming in at 0.7. Up to you whether you think that £4 out of a £10,000 investment is really going to move the dials anywhere. If we have a quick look here, you can see you're going from 499 holdings up to the 503. This is just how the funds are actually made up. But if you look at the top 10, it's just slightly out by 0.0 something of a percentage point difference between what each of the funds hold, or what their percentages are. Same again on the breakdown of sectors. Very little difference between these. If you find some value in this kind of content, or you want me to do stuff very similar to this, I'd love it if you could drop a comment down below, hit the like button and think of subscribing. So let's just do a quick recap, trying to bring everything together to make it slightly easier to look at, which we can do using this spreadsheet. I will drop a link to this spreadsheet down below so that you can go away and have a quick look at it. But this just gives you some of those key basic fund level information, what fund size looks like, and what the total expense ratios are. Is that something that you really want to bring into the mix? Or is it that you're actually looking at that dividend? It might be the frequency or the return that you're going to get that really draws you to it. Is that 0.01% extra that you're going to get through IUSA really going to move the dial and make you choose that? Or is it going to be that you want to go for something like VUSA that has got that largest fund size? Or do you go for something that's been around the longest? There is very little between any of the returns or the volatility. So as with everything, go away and do your own research and decide which one is for you. I'd love it if you could drop a comment down below to tell me which one is the one that actually floats your boat, or which one you're already invested into. Why don't you go and have a look at this video that talks about FUSI, and maybe that dividend is something that you will be more interested in as opposed to the growth that you get through some of these ETFs. Thanks very much for watching, and I will see you in the next one. Cheers, bye.